Hi,
We
y'all.
live.
And we are in Querétaro, Mexico, y'all.
Hey,
If you didn't see Sunday's premiere featuring Kina of Things Mom Should Have Told You, then you might not be prepared for tonight's Thursday short, right?
hey, today we're talking about money.
Mm-hmm.
And we're in Mexico because number one, we have permanent residency here. Number two, we are financially free and can be wherever and whenever we want to be. Somewhere
That's right.
we will be.
That's right. And we want that life. We want that life. So if you're a Black woman, if you are a Black woman and you have not signed up for Exodus Summit, the question is, why not? I have been to every single Exodus Summit except for the first one. And guess what? After I went to, well, it was their second annual, my first one, we were out of Dodge 6 months later.
Yep.
Okay? We were out of Dodge 6 months later. We left the United States 6 months to 7 months after I attended my first Exodus Summit. So if you are not signed up, you need to sign up. There is a link in the description below. Use our link so that we can get credit.
Yes.
So we,
Never say credit.
right?
Also, under our free resources is our investing facts.
Right. Because today we are going to talk about investing and we're going to explain some basics to you, right? We're going to explain some basics on how you can analyze financial uh, um, statements from a company that you might want to invest in. Also, if it's index funds, right? If funds run the same way, you need to be able to read these financials. We're going to relate to how you manage your household budget so it's going to be easy. And guess what? We have a free checklist in the description below. So that's under weekly resources. It's the first link that you see. It's all free. We put it together for you so that you can start to analyze whether you are making good investments. All right. Or if you are not investing at all, this is a good place to start. All right. So let's go ahead and get started. My name's Halisi.
And I'm Rick. Welcome to our Black Photography.
On our channel, we talk about money, y'all. We talk about money, travel, and life abroad. We help folks who look like us. We're getting close to retirement age, have to plan. We help them get their money straight so that they can retire on time or maybe even
Abroad and early is even better.
That's right. All right, sweetheart. So what? First of all, I want everyone who is watching to wish Rick a happy birthday. Today is his birthday,
Today is
y'all.
my birthday.
Today is his birthday. So if you're watching from the future, hey, you can still wish him a happy birthday. All right, wish him a happy birthday. What are we talking about today?
So today we're going to talk about reading financials like a pro.
That's right.
Okay. And
That's
and Black Americans really, I can't emphasize it enough, they really need to invest if they haven't already.
Y'all, if you are not operating like we are in a 5-alarm fire when it comes to democracy in the United States, I want to slap you. All right. I want to slap you if you're not. All right. I'm going to leave that alone. All right. Let's start with the first financial statement that you are going to review when you're thinking about investing, and that is the balance sheet. And the balance sheet basically is
it equals your net worth snapshot.
Right, in a snapshot. So that means it's your net worth at a particular point in time, right? And it is the same with a company. So if this is your household, what would that look like? Your assets.
Cash, checking, saving, investment accounts,
right?
Home value, and your car.
If you're not upside down in that car,
right? Not upside down.
Right? And then your liabilities, your mortgage, your credit card, your student loans, right? Your car loan, all of those, right? Those are your liabilities. So you've got assets minus liabilities equal
your equity
or net worth.
Your net worth.
All right. Assets minus liabilities equal your net worth. And so when we say we went from negative 22,000 to over 1.1 million in net worth, now you understand what we're talking about. All right. Mm-hmm. And so the simple formula, assets equal liabilities plus equity. So household net worth, that is what you own minus
what you owe. What you own minus what you owe.
All right. It's that simple. It is that simple. And the balance sheet is that simple. I know you will see things on the balance sheet, which is like shares outstanding and things like that. What you need to concentrate on is what is the net worth. All right.
And then you
So,
need to really,
quick health check,
you may say that.
right?
You took the words out of my mouth. Give them
Uh,
that. So liquidity months, cash and cash like. I was going to
Divided by
say,
monthly
divided
expenses.
by, I couldn't get it out from you.
Cash and cash like, right? What's cash like CDs, right? That's cash like. Divided by monthly expenses. And then your debt load. Total debt divided by income or debt divided by assets for leverage. All right. Don't get confused. Now, from an investor's lens, what you want to look for is strong cash balances. All right. Manageable debt, just like your household, manageable debt and growing equity without dangerous leverage. What is leverage? What is leverage? Okay. That's just a fancy word for saying debt. How much have you borrowed against the things that you own? That's leverage. Have you leveraged your house? Have you leveraged your assets? That's borrowing against your assets. That's all they mean. All right. It's not rocket science. They want to make you think it's rocket science. They want you to get a financial advisor. They want you not to pay attention so that they can make money. But listen to me, folks. If your financial advisor is not under 35, I would wonder why they're still working. I'm just saying. If you know that much,
You should be, you should be well ahead of the game.
right? If you know that much, why are you still working? Or does your financial advisor have the same illness as the tech bros? Enough is never enough. So either you've got a financial advisor who just wants more, right? You've got 10 million in the bank, that ain't enough, 20 million in the bank, that ain't enough, 1 billion in the bank, that ain't enough, right? Or they don't know what they're talking about. But if they're young, they haven't had time to build it up, right? I'm just saying. I'm just saying. All these financial advisors are not all that they crack up to be. So number two, the third thing is
Income statement
and that
equals your paycheck to savings.
That's the story, right? Paycheck to savings story. So what is it? Money earned, money spent over a period of time. So an income statement or a P&L, profit loss statement. All right, same thing. Income statement, profit loss statement is the same thing. All right, and that is going to look at a position over a period of time, usually a month, sometimes a quarter, sometimes a year. All right. So what would this look like in your household?
Income, paychecks, side hustles, pensions, Social Security, rental income,
If you got that right.
if you have it.
And then how much did it cost you to earn all of that stuff? You got to add in, okay, mosquito, sorry.
We're in a courtyard. So
We're in a courtyard and look, I got them. Dead. All right. Right, cost to earn. How much did it cost you to earn that? See, jobs cost money.
Yeah.
Right, dry cleaning.
Commuting.
Right? Child care during workout. Right? Licenses, if you need a license, if there's any tools that you need for your job, phone for et cetera, right? That's the cost of goods. That's the cost. Right? Earn that money. Operating expenses.
Living, rent, or mortgage, interest, utilities, groceries, and insurance.
Et cetera, right? Those are your operating expenses to operate your life, the business of life, right? So you got your cost to earn, you've got your operating expenses, then you have your savings. That's your profit, y'all. That is your profit, the income minus all expenses. Now, so the simple formula, income minus work-related costs equal your gross household income. Savings rate is savings divided by income. We told you, Rick and I were saving 65% of our income. 65% of our income. All right. And so what, quick health check, income growing faster than lifestyle? It better be.
Yeah, it should be.
It better be. Right? What is your savings rate? It better be trending
Trending up.
right? Up and to the right, up and to the right. The same way with the financials of business. All right. So from an investor's lens, what are we watching?
Watching revenue growth, margins, how much is kept after costs, and profit trend.
All right. Rising sales better equal rising money, right? Right? Rising sales, rising money, right? Like you should be rising in sales, and yet the amount of money that is coming into the business is not rising at the same rate. If so, the company has a problem. It has a spending problem. All right. It's a spending problem. And what you would need to do is investigate what that's all about. If you think the company is worth investing in. If this seems a little over your head, you need to go beyond the bling. All right. Beyond the bling is our financial freedom program for late bloomers like ourselves, right? Everything that we learn to get from negative 22,000 in net worth to 1.1 million in net worth is in Beyond the Bling. All right. And that information is in the description below. Hey, y'all. Thank you for wishing Rick a happy birthday, you guys. We appreciate you. All right. So we talked about the balance sheet. That's your net worth snapshot. All right. We talked about the income statement. That is your paycheck to savings story, right?
Yes.
We gave you the simple formula. We talked about what that looks like when it comes to companies. All right. It is the same thing. And the third is the cash flow statement.
Right.
And what does that equal?
Where the cash actually went.
Where your money at?
Where your money go?
Where your money at? All right. This tracks actual cash in and actual cash out. And it is grouped by category. All right. And so a household analogy might be operating cash flow would be
take home pay minus monthly bills or work costs.
That's right. Investing cash flow could be buying or selling assets like a car, home repairs, ETFs, your rental properties, et cetera, et cetera. And then lastly, financing cash flow.
Borrowing or paying down debt, plus any transfers that change loan balances.
So the simple formula, y'all, beginning cash plus net cash change equals ending cash. That sounds like what? Huh? Look, free cash flow. That's what we're talking about. Free cash flow. It is the delta. All of you Beyond the Bling people, it is the delta. It is the gap between what you bring in and what's left over. All right. And what's left over better encompass your big planned purchases for the future, just like the company, right? So whatever their cash flow is, better take into consideration any R&D, research and development, and any like plants they want to buy, or anything that any big purchase, major purchases that they want to buy, better be included, right, in their strategic plan. And able to be taken care of with their free cash flow. You do not want to invest in a company that does not have free cash flow and is using debt, just debt, all right, to grow. If that is the case, something is wrong. They're not spending their money correctly. They're not investing correctly, etc. All right. So if we look at it, from investment speak, we're talking about positive operating cash flow consistently over a period of how long?
5 years or more.
Right? 5 years or more, folks. All right. And you can find this information out on Yahoo Finance, Morningstar. If you are a Beyond the Bling person, then we use Better Investing. Better Investing is a nonprofit organization that basically started the club investing program in the United States. All right. And so for $100 a month or something like that, a year, not a month, a year, you can get all the educational tools.
Yeah.
And it will teach you how to invest. All right. Everything that I know that I didn't learn from Our Rich Journey and my stepmother, shout out, I learned from Better Investing.
Yeah.
That's what we learned, right?
That's what we learned.
And that's what we learned. So positive operating cash flow consistently over a period of
5 years or more.
Investing outflows that build productive assets. That's what we were just talking about, right? Like, what is this money going to be spent on? right? It's not going to be spent on Fendi bags, y'all.
Yeah, not just styling and profiling.
Right?
Not
It's not
stuff.
it's not going to be spent on Fendi bags. It's going to be spent on assets that create revenue, right? And then we're financing used only to reduce high interest debt or to invest in profit creating assets. And so from an investor's lens, we prioritize free cash flow.
Profits on paper are nice. Cash that survives after investments is power.
That's power. That's power. All right. So we're going to give you a cross check so you can cross check. All right. Profit up. This is the short version of what we just said. Profit up, cash down. Something's wrong, right? In a household, I got a raise, but my cash fell. What happened? How you get a raise, but you ain't got no more money? So either you're not putting enough money in your 401k and they're taking out too many taxes, or your lifestyle increased, right? Your lifestyle increased with your raise. So for companies, check working capital and CapEx. The second one.
Assets up, how it's paid for. If household assets rose because of more debt, risk rose too.
That's right. Right. So because debt is risk. Debt is risk. So for companies, see whether growth was funded by debt or internally generated cash, right? How was the growth? How was the growth? Dividends or buybacks versus cash flow. Y'all. All of these buybacks that the companies are doing, this does not help us, and nor does it help the country. And there used to be incentives not to do that, but no more. All right. So dividends, we have our dividends set up to automatically reinvest. Okay. Yeah. Because the fact of the matter is, if you are investing and you want dividends to create income for you, you need to figure out how much you need invested for those dividends to actually create enough of a salary or income for you to live on, right? And oftentimes that's going to be in the millions. And so if you're a late bloomer like we are, dividends is not going to be your answer. All right. Dividends are not going to be your answer unless you have a house that you can sell and funnel in $700,000-$800,000, right? Then now we're cooking with Crisco, right? Mm-hmm. A household can't sustainably treat yourself if cash flow is weak, right? We can't be treating ourselves all the time if the cash flow is not coming in.
No.
Same for companies. It's the same for companies, y'all. All right. One-time items.
A tax refund, bonus can make a month look great for companies.
Or for your household.
Yeah. So watch for one-offs that initiate profit but won't repeat.
Right. So if you see a big jump in profit for a company, but that doesn't happen all of the time, it's not consistent, then the question is why, what happened, right? And so sometimes what happens, maybe it's because they bought another company. Mm-hmm. So that's not a one-off. That's going to be something that's consistent. But if they got a contract for one thing that gave them a big boost, or think about the pharmaceutical companies when it came to COVID and the COVID vaccine.
Mm. Yeah.
Look at how that stock went up. And now where is it? Right? Now where is it? It's back down, right? Because that was a one-off. Hopefully it's a one-off and we won't have another pandemic in our lifetime. You get it? All right. Red flags versus green flags. All right. Red flags this is a red flag, negative net worth, and it's a trend. If you have a negative net worth, that's a red flag, and you need to get your financial act together. Mm-hmm. Right.
Rising short-term debt to cover bills.
Are you using a credit card to pay your utility bill?
Yeah.
Are you using a credit card to pay for groceries and not paying off that credit card at the end of the month? 100%. We've got some issues, folks. We've got some issues. Savings rate is falling, right? We said we were saving 65% of our income. Savings rate is falling, profitable, but chronically negative operating cash. All right. If that is the case for a company, boom, you don't need to look any further. Don't invest. Do not invest, right? And if this is your household, baby, you need to join Beyond the Blank. You need to join Beyond the Blank, because you can go to Exodus Summit and learn how to make the money. But if you're spending the money as fast as you're making the money, right, then that's not going to help. Go to Exodus Summit, learn how to make that extra money, then come to Beyond the Bling and learn how to create financial freedom for life. That's what you do.
But then you do have the green flags.
Right. Wait, frequent share dilution or mounting debt for companies, right? Mounting debt for yourself or for companies is always a bad sign. And if the shares are being diluted, that is also a bad sign. Now, what are the good signs? The green flags.
Stable emergency cash.
Rick and I have 2 years worth of living expenses saved. We had that when we moved from America to Portugal, and we have that today, 3.5 years later. Praise God. All right. We have that today. Manageable debt. We have no debt besides our mortgages.
That's it.
All right. What does it is the company that you're looking at? Can they pay their debt easily?
Mm-hmm.
And if they have more cash than debt, why do they have that debt? Are they saving their cash for something in the future? Like, read the stuff, right? Read the stuff. Read their quarterly reports to see what they're doing for the future if they've got a lot of cash on hand. Yeah. All right. If they've got a lot of cash on hand and debt, I will still question management unless there's a plan for that cash. Cash should not just be sitting. It should be growing. All right. So you want a positive and growing free cash flow. Yeah. Rising savings
rate. Yeah.
And then last but not least,
asset growth funded by real cash, not just borrowing.
Right. Not borrowing. Not, oh, I paid my groceries with my credit card and now I got all this money in the bank and I can spend that too. No, ma'am. No, sir. No, sir. So if money is the thing keeping you stuck in America, we said that Exodus Summit for Black women will teach you how to make money fast, right? And then Beyond the Bling will teach you how to be financially free for life. We do a side hustle challenge. We just got finished with that. And we have a financial freedom lab that we will be launching soon. You know, as a matter of fact, y'all know we're having a meetup on Saturday here in Querétaro, Mexico. Our annual meetup is in June, during Juneteenth week, and it is in Portugal. All right. And so if you are interested in coming to our meetup in Portugal, we're going to have a Zoom call to talk about all of that stuff. You need to get on our mailing list, because we're not going to announce it. It's going to be a private Zoom call for utopians who might want to come to Portugal for our meetup. Okay. To manage expectations, to tell you guys all of the info. So sign up for our email list. And we'll probably do that in the next couple of weeks. Yeah, probably October. We'll have that Zoom call. All right. So sign up now. And with that, y'all, we're going to let you go. Anything more? Happy birthday to my husband.
Thank you so much for the birthday to my greetings.
Husband. And what we want for you all, everyone who's watching, first, hit the like. If you're not subscribed, why?
Yeah.
If you find this information helpful, please hit that like button. Let YouTube know that this is information that needs to be shared. Okay.
Pass it on.
We love you guys, and we will see you on Sunday live again from Mexico. Bye. We about to go drink some margaritas, y'all.
I need a drink.
Bye.